Gold just spiked to 4,100, and markets are screaming one question: is a Fed rate cut now guaranteed?
This video is for informational purposes only and does not constitute financial advice. Always do your own research.
This is Coin Picker, fully, where global markets meet clear, powerful insights.
Welcome back, everyone. You're watching Coin Picker, String, your daily source for gold, markets, and breaking financial news. Gold opened the week with a strong surge, climbing toward the key 4,100 mark. The metal gained nearly 0.8% as traders bet heavily on a December rate cut. Confidence surged after dovish signals from Fed officials Waller and Williams. Their comments pushed the probability of a December cut to a staggering 76%. Just 1 week ago, that probability sat near 42%. The Cavs, a massive shift in sentiment.
Despite a firm US dollar, gold held its ground and continued to push higher. Lower US bond yields helped support the metal, reinforcing bullish pressure.
Gold has now traded inside a narrow 4040 to 4100 range for 4 straight days.
This sideways structure reflects a market waiting for the next catalyst.
Upcoming US economic data could deliver that spark and sieve and determine the breakout direction. This week includes ADP employment, PPI, retail sales, durable goods, and jobless claims. All of these reports will be watched closely before the Fed enters its blackout period. For now, the market is fully embracing a dovish narrative. Investors believe the weakening labor market gives the Fed no choice but to ease. Even geopolitical developments have taken a back seat as monetary policy dominates sentiment. This sets the stage for a potentially explosive move once data hits later in the week. Now, let's dive into the technical structure that explains gold's current spike. On the daily chart, gold continues to trade above all major moving averages. The 20-day SMA acts as the first key support at 4045. Meanwhile, the 50-day SMA sits lower at 3989, forming the deeper support zone.
Price momentum is flattening, signaling consolidation before a potential breakout. The RSI remains in bullish territory, showing buyers still hold the advantage. Zooming into the 1-hour structure reveals an even clearer pattern. Gold is forming a symmetrical triangle and steam, a classic setup before a volatility burst. The upper trend line sits near 4133, acting as the ceiling. Meanwhile, the lower trend line continues rising, give and dig, a sign of improving market strength. This tightening structure means gold is preparing for a decisive breakout. If buyers break above 4100, the next barrier stands at 4133. A clean breakout could unlock 4160 and even 4210. But if the lower trend line breaks, gold may retest 4000. Below that, the next support is the 3989 region at the 50-day SMA. Volume remains steady, showing neither side has fully committed yet. This is typical before major macro events team. Price pauses while traders wait. In short, gold is compressing, and compression leads to expansion. The biggest catalyst is the surge in expectations for a Federal Reserve rate cut in December. Fed officials Waller and Williams both hinted that weakening labor market data supports a cut.
This helped push the market-implied probability of a December cut to a stunning 76%. Lower bond yields have added more fuel, reducing the opportunity cost of holding gold.
Despite the US dollar staying firm, safe haven demand prevented gold from losing momentum. Meanwhile, geopolitical tensions have taken a rare pause, giving monetary policy full control. This has allowed gold to rally 4 days in a row inside a tight price channel. Investors now await high-impact US data to confirm whether the Fed has enough evidence to ease. ADP jobs, PPI inflation, retail sales, and durable goods will all shape the December outlook. Even the US jobless claims report may tip the balance if labor numbers continue weakening. Now let's break down why gold behaves this way when rate cuts are on the table. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold. A weaker dollar normally adds even more upside momentum, but gold is rising even without that. This shows powerful underlying demand, partly driven by central banks accumulating gold. Countries like China, India, and Turkey have been buying aggressively for over a year now. And with global uncertainties still lurking, investors continue to see gold as a stable hedge. Now let's bring everything together by looking at the big picture technical structure. Gold remains inside a long-term uptrend, supported by rising moving averages across all time frames. Momentum has slowed, but the structure is still bullish as long as price stays above 4040. If the market breaks above the triangle resistance, a strong continuation toward 4160 is likely. Breaking that level opens the door to 4210 and potentially even higher into the month end. On the downside, losing the rising trend line would shift risk toward the psychological 4000 level. Below that, the 50-day SMA around 3989 becomes the final line of defense. All eyes remain on incoming US data, which could decide whether gold explodes higher or pulls back. Sentiment is leaning bullish, but the market wants confirmation before choosing a direction. For now, the key question remains, will the Fed actually cut rates next month? If they do, gold could break out with force. If they don't, we may see a sharp shakeout. Either way, the 4000 level and the triangle structure will guide the next major move. Traders should stay alert, as volatility tends to explode after long periods of compression. Before we end, remember that this analysis reflects market conditions, not guaranteed outcomes. Markets are unpredictable, and no scenario should be seen as financial advice. Always manage risk carefully and make decisions based on your own research. Thank you for watching Coin Picker. Stay sharp, stay informed, and I'll see you in the next update. Stay ahead of the market. Subscribe now and follow Coin Picker for the latest insights.